Knowledge isn't power, it's profit. Ooh, that's crazy right there. What's up, dreamers? I'm Zeke and welcome to the Dream Green Show. Have you ever wondered what truly separates successful investors from those who just can't seem to catch a break? What if I tell you that I went from zero, starting from scratch, to over $100,000, well actually hundreds of thousands of dollars in the stock market by applying these simple 7 strategies, these simple 7 habits. And here's the kicker. Habit number 6 is so crucial, and knowing it literally wiped out my entire account. So trust me, you don't want to miss out on that one. Welcome back to the Dream Green Show, where scared money don't make no money. Go ahead and drop that in the chat. Let this video get a crazy amount of likes. Let's shoot for around like 1,000 thumbs up. If we could get 1,000 likes on this video, that would help out this channel more than you guys can possibly even imagine. But before we dive into it, let me ask you this. Have you ever made an investment that you knew was a sure thing, only to watch it plummet? If so, you're not alone. Listen, drop a comment down below about your biggest investment regret. I read every single comment. We might just learn from each other's experiences. But if you don't want to start your investment and journey alone, I will be happy to help you with the Patreon link down in the description and also inside the pinned comment section. Inside the Patreon, I post every single time I buy and sell a stock, my option trades. We also have 3 pro day traders in there that post their option trades every single day, and they are absolutely killing it. People are making thousands of dollars inside of the Discord. The Patreon will take you to the Discord where we post all of that, and you'll also be a part of a community of traders that want to be financially free just like you. So if that sounds like something you're interested in, go ahead and click that link down in the description and inside the pinned comment section. But let's go ahead and dive into habit number 1. The first habit that flipped my account upside down was effective capital management. Now I know what you're thinking. Hey Zeke, that sounds like some Wall Street mumbo jumbo, but hang tight, I'm gonna break it down. Imagine this, you're at a casino with $1,000 in your pocket. Do you throw it all on red at the roulette table? Probably not, right? Investing is no different. Early on, I used to dump large chunks of money of capital inside a single stock, inside one stock, or maybe a risky option play, thinking I was about to hit the jackpot. Spoiler alert, I didn't. I realized by allocating no more, maybe a little less, but no more than 20% of my investment capital inside of any single asset, any single stock, I could protect myself from any crazy losses. This way, if one investment tanked, and believe me, sometimes they do, I wouldn't be out on the street singing the blues. All right, I would be just fine if just one investment tank. Now, a good way to fix this is through diversification. You could do this the easy way, or you could do this the hard way. Now, the hard way is by investing inside of many different good stocks that you actually like across many different sectors. Now, the hard way, you could start off by investing into many different stocks that you actually like across many different sectors, because you don't want to put all your eggs inside one industry like oil and gas. And then if oil and gas crash and you have many different stocks across the oil and gas sector, no matter what happens, you're still going to lose money. You want to diversify across many different sectors. So that's the hard way. The easy way to do it is by investing inside of ETFs, which is exchange traded funds. These are companies that have many different companies. One of them that I'm going to tell you guys in this video is ticker symbol VOO, and another one is ticker symbol QQQ. They have the top technology companies inside of their portfolio. Now, just from investing inside of this one ETF VOO, you are essentially investing inside of America's top 500 companies just from buying this one ticker symbol, ticker VOO. QQQ will give you the top technologies. I think they got about 120. I think they got a little bit over 100 companies inside their portfolio. So you can hand select every single stock that you want, or go buy 10 and 15 of these different companies that you like, or that's the hard way, or you can just buy one ticker symbol and it diversifies it across many different sectors, across many different stocks. The S&P 500, the top 500 companies in America, you can just buy that one stock and that will take care of the diversification for you. Now, if you've been following this channel for a while, you guys know that I invest $25 every single day, my daily buy $25 every single day into ticker symbol VOO. Right now, I've got in around 30 shares, and VOO is at $543, and I am up 28% just from investing $25 every single day inside the stock market. So I'm not really worried that a single stock would crash, because I have my money invested across 500 other companies. And then I also invest $40 every single day into ticker symbol QQQ. Now, here we are on QQQ. I'm also up 28%. And as you guys can see, I'm investing $40 every single day inside of QQQ. Well, I used to invest $20 every single day. As you guys can see right there, I used to invest $20 every single day, but I upped it from 20 to 40 because QQQ is absolutely killing it. And they got the top technology companies inside of their portfolio. And we all know technology is killing it right now. So if we come over to Seeking Alpha, you guys can see 33% inside of technologies, 12% inside financials, 11% inside healthcare. So they're very diversified. Here's their top 10 holdings: Nvidia, Microsoft, Amazon, Meta, Tesla, Apple. And then right there, you guys can see they have 507 different holdings inside of their portfolio. So yeah, by managing my capital wisely, I could sleep at night knowing that a single bad day inside the stock market wouldn't wipe out my entire portfolio. So ask yourself, are you putting all your eggs in one basket? If so, might be the time to rethink your strategy. All right, on to my second habit, which would be strategic position sizing. Now, this one is a huge one. I used to think that if I was confident about a stock, I would go all in. But that's like saying I love pizza, so I'm gonna eat pizza for breakfast, I'm gonna eat pizza for lunch and for dinner. Sound great until you realize you haven't had any vegetables in a week. You know what I'm saying? But listen, I'm saying this to say I learned to invest only around 1 to 5% of my total capital per trade. This way I can make multiple investments without overexposing myself. Like in the past, when I seen the perfect setup for a swing trade, I'm talking about it was just perfect, I would go all in, and even when the setup was perfect, the stock would still go in the wrong direction and I lose a lot of money. Was there anything wrong with my setup? Nope, my setup was just fine. But sometimes the market just don't go in your direction, even with the perfect setup. But because the perfect setup tends to win 65 to 70% of the time, I learned to position size and take multiple trades. So if I seen the perfect setup in a week around 10 times, other than going all in on the first trade, I would only invest around 5 to 10% of my trading account per trade over the 10 perfect setup trades, and I would win 6, 7, sometimes 8 out of the 10 times. And that's all you need. If you have a risk to reward ratio of 2 to 1 and you're trading 5% of your portfolio, all you need to do is win 4 out of 10 to be a profitable trader, because your risk to reward ratio is 2 to 1. But if you see the perfect setup 10 times and you starting to win 6, 7, sometimes 8 out of 10 times, you will become a profitable trader. So you don't want to say, oh, the RSI is oversold, oh, everything looks perfect, I'm going to go all in on this trade, Nvidia is doing amazing, I'm going to go all in on earnings, and then bam, you lose all of your money. Even with the perfect setup, you guys can still lose. If you don't want to trade on your own, guys, join the Patreon. I have 3 professional day traders in there that post their day trades every single day, and they are absolutely killing it. And I got courses in there with quizzes and guides that if you want to learn how to become a trader and make money that way, guys, join the Patreon. That link is going to be down in the description and down in the pinned comment section. Don't do it on your own. You're going to lose a lot of money trying to figure it out on your own. Get someone to help you. Even if it's not me, get someone to help you. All right, so now we're over to the third habit, is to avoid over diversification. Wait, didn't I just say diversification is a good thing? Well, yes, but too much of a good thing can actually be harmful. When I first started, I had tiny amounts of spread across like 50, 60 different stocks. Keeping track was a nightmare. I couldn't keep up with it. It was trying to watch like 50 TV shows all at once. It's not effective. Definitely was not enjoyable. By focusing on maybe 6 to 7 quality investments, I could give each of them the attention that they deserve. This focus led to better decision making and ultimately better returns. By concentrating on my portfolio, I wasn't just investing money, I was investing time and knowledge. And trust me, it makes a huge difference, guys. I promise you, it makes a huge difference. I was able to watch company events like Apple and Tesla, like the Apple events, the Tesla Robo Taxi event. I was able to listen to earning calls, pay attention to company CEOs and their plans with different companies. Dialing in on just a few stocks helped me invest my money wisely. Here's where it gets interesting. The fourth habit helped me choose those high quality investments, and it's a habit that could turn any beginner into a suave investor. So habit number 4 would be do your homework. Now, I don't mean sitting down and flipping through the pages, taking notes and cramming like it's final weeks. I'm talking about deep diving and doing your own research before investing a single dollar inside of a company. Did you know that Warren Buffett reads around 500 pages a day? That's how he stays ahead of the game. That's what they say, 500 pages a day. I don't know if he's still reading 500 pages a day. That's crazy. But let me share a personal story. I was eyeing this tech company that everyone was buzzing about. The hype was real, but instead of jumping in blindly, I spent time digging into their financials. Turns out they were bleeding cash, running through cash, and had a shaky business model that I wasn't just down for. And boy, oh boy, did I dodge the bullet with that one. I mean, that company went down. One of the companies I have recently been doing research on is Dutch Bros. This is free game for you. I've been paying attention to them for a while, did my research, discussed them inside of the Discord that I would be investing into Dutch Bros, and then boom, they had an earnings call. Dutch Bros took off. Some members gained over $1,000. Now, I talked about Dutch Bros before it took off. I said, hey guys, what do you think about Dutch Bros? I posted inside the community on YouTube. I posted inside of my community in Discord. I said, hey guys, I'm going to invest inside Dutch Bros. This is why. Do with it what you will. And some members inside of the Discord made over $1,000 just from that research alone. So remember guys, knowledge isn't just power, it's profit. All right, so here we are on habit number 5. All right, so habit number 5 might be the hardest to master. All right, it is emotional control. Markets could be a roller coaster. Trust me, you're gonna have your ups and your downs, and it's easier to let fear or greed dedicate your decisions. I'll never forget when I panicked sold a stock during a market dip, only to watch the same stock skyrocket 200% the next couple of months. Man, was I hurt. But that was a long time ago. That's me a long time ago. Trust me, I do not do that anymore. That's why I'm passing you guys my knowledge, my mistakes, my skills from years of investing onto you so you don't make the same mistakes as me. But yeah, when I realized that emotions had no place in investing, you stick to your strategy. You don't let short-term fluctuations shake your research or your strategy. If you have done your research and really love a stock and know that it's a solid company, when the price drops, we see it as a company being on sale. If you go to the store, right, and see a pair of Jordans on the release date for $250 and you thought, ah man, I really want them, but that costs too much, I'm fine. But you walk in a week later and see that same exact pair of Jordans brand new for $175, would you not buy those pair of Jordans that you really wanted? Because it's on sale, right? It's the same shoe, still new. Week later, $175, it's on sale. Nothing about the value of that shoe dropped at all, nothing. So you're gonna buy that shoe because it's on sale. And that's how I started to view the stock market when Tesla and Apple dipped over 20% and Tesla dipped 30-40% one time. I took my emotions out of it. I didn't panic, and eventually the price came back to the original price and it soared up. So when it dipped, we see it as the stock market being on sale, and you usually when stuff goes on sale, you usually buy more, and that has changed my investing strategy by far, is that you don't panic when the market pull back. This strategy only works if you invest inside of good quality companies. If a penny stock drop, you screwed. But if a good solid company like Microsoft, Amazon, one of those companies drop, you go in and you buy more because we see it as an on sale. You take your emotions out of it. Oh, it's been falling for the last 6 months. Great. That's perfect. We've been waiting for this opportunity for Amazon to fall for 6 months straight. We're gonna go in and buy more stocks. We're gonna go in and buy more shares of Amazon because it's on sale. So that's investing strategy number 5. All right, so the 6th habit I'm gonna bring you guys is regularly portfolio checkups. But here's the twist, doing them, you gotta do them right away. Don't be waiting to the end of the year to do a portfolio checkup. Most people either check their portfolios every single hour of the day, or they invest and completely forget that they even bought this stock entirely. Both extremes can hurt you. I used to be glued to my screen every hour of the day, reacting to every tiny little change. It was exhausting, all right? It led to hasty decisions. Oh, it's up today. Oh, it's down tomorrow. I need to sell this stock, and then it's right back up the next day. I need to buy, and then it's right, like going hour by hour, day by day. Man, listen, it took up too much time checking it every single day. But now I have a schedule, either checking it bi-weekly or every month or so. While I assess the performance or reevaluate evaluate my investments and adjust as needed. During one of these checkups, I discovered that a company I invested in was about to announce a major merger. Because I was on top of it, I increased my position size, and before you know it, the stock price shot up. The same thing happened when I seen this company was going to hire this amazing CEO that was going to turn the company around. The stock price also shot up. And then there's another time when I discovered that a company I love was going to start to go in a different direction than I expected. So I decided to either cut back or let them go, and that company has never been the same since, and I lowered the risk of me losing money inside of my portfolio. And then there was another time where a company announced that they was going to be cutting their dividends. Good thing I caught a hold of that, because the stock would have crashed so much more if I wasn't on top of that. I would have checked it a year from now and been like, whoa, what's this company doing down 30-40%? And then I really been pissed off. So good thing I stay on top of my portfolios. Either every 2 weeks or every month or so, I do a deep dive on each position inside my portfolio, because checking up regularly on your stocks can uncover golden opportunities. All right, so now that's going to take us to our 7th habit, and the 7th habit is of course, it's continuing your learning and adaptation. Now, the investment world is like an ever-changing landscape. New technology emerges, market shifts, the economic policies involve and change all the time. So you have to stay ahead and need to be a lifelong student, right? You can't just say, I learned this 10 years ago. When it comes to the stock market, it's going to work 10 years now. No, you have to change with the times, with the markets, with the economy. You have to continue to learn every single day something about the stock market and investing. I dedicate time each week to read books, listen to podcasts, watch YouTube, watch webinars. Yes, I watch other YouTubers because I learn from them. I'm pretty sure they watch me and they learn from me. We all share knowledge with each other so that we all could make money and become better investors, right? So you want to pay attention to even things that's going on around the world, because something that happens on the other side of the globe can affect the market here. Remember, knowledge isn't just power, it's profit. Ooh, that's crazy right there. So of course, the more you know, the better decisions you can make. So yeah, if you're finding any value in these habits, make sure that you smash that like button. Remember, we're trying to get over 1,000 likes on this video, and we're trying to get you guys to subscribe to this channel to hopefully get over 300,000 subscribers on this video by the end of the year. So hopefully try to get over 300,000 subscribers on this channel by the end of the year. So make sure that you subscribe for more game-changing content like this. It literally helps out this channel more than you can even imagine, and it's completely free to subscribe and hit the thumbs up button and possibly hit that notification bell. All right, so let's look at a quick recap over the habits that we talked about in this video. We got effective capital management, strategic position sizing, avoid over-diversification, do your homework, master your emotions, regular portfolio checkups, and continuing learning and adaptation. Remember, these habits work best when you apply them all together. It's like baking a cake. You can't skip an ingredient and expect the cake to turn out right. You got to use all the habits together. All right, so here's a challenge for you. I want you to just pick one for now of these habits and start implementing it today, then come back and share your experiences in the comment section. Let's hold each other accountable and grow, because let's all grow together. If you ever felt overwhelmed or made mistakes in investing, know that you're not alone. We all stumble. The key is to learn, adapt, and keep moving forward. You guys can do this. Remember, the journey to financial freedom is a marathon. It is not a sprint. And with these 7 habits, you will be on your way to success. And if you don't want to do it alone, the link to the Patreon is down in the comment section. Over there, you guys know we share tips, we share insights. You'll be a part of a community of traders. You have access to courses. And trust me, it's a course in there right now that you guys might want to take advantage of before it's too late. And also, for everyone that made it to the end of this video, if you do want to get some free stocks, click the link down in the description to Moomoo. Right now, they're giving you guys, just for signing up to 15 free stocks just from signing up and using their platform. That is a perfect way to get started inside the stock market, is with free stocks. And you also earn an 8.1% cash sweep interest on the uninvested cash inside your portfolio. So if you guys looking for easy commission free way to start to buy and sell and trade stocks, the link to Moomoo is going to be down in the description. But that's it, dreamers. Thanks for watching. If you found this video helpful, make sure you hit the thumbs up button and don't forget to subscribe and hit that notification bell so you'll never miss an update. Until next time, I'm Zeke, bring you the Dream Green Show, and I'm out. Peace.